Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Let me display the PowerPoint presentation. Asian session live market analysis on November 9th between 5 and 5:30 GMT. And we'll be doing a simple market tracking technique using the live market code page. So let me give the link for the live market code page. You can open it in a browser, and I'll also fix the camera on the live market code page to explain to you how exactly you can view the different currency pairs. Now, euro current level is 1.4937, 1.4939, the bid and the ask, and the currency symbol is given in the first column. The second and the third column give the bid and the ask. The spread between them varies depending upon the platform, but this is actually from the interbank treasury, so you can use it as a dependable code. And then you come across the low as the next column and the high set during the day. Initial high and the low set for the day are being displayed here, and whether the currency is cutting the high and going above or cutting the low and going below, you'll be able to identify straight away when you time to time check the market in relation to that of the high and the low. Currently euro is near the high, and 1.4942 is the high, and 1.493638 the call, and the net change will come across 90 pips. And the timing, GMT timing, is also given there, so you will be able to track it in relation to that of the GMT time, irrespective of the country you belong to, so that you will be able to understand how exactly the market is making at 24 hours cycle. In the case of GBP, 1.6716 is the current price, and 1.6610 is the low, about 100 pips below that, and the high is 1.6719. The market is currently closer to that of the high. The net change you come across is 113 pips positive. In the case of yen, it is 9012 is the current level, 8971 is the low, 9020 is the high. Currently yen is also near that of the high. The net change is 30 pips. So in all the three currency pairs, you find that the net change is positive. That is euro, GBP, and also USD yen. So when euro and GBP are rising, USD yen is supposed to fall to show USD weakening move. Instead, yen is showing USD strengthening move, and euro and GBP are showing USD weakening move. This is referred as contrarian move. And why they are making this contrarian move for the weak beginning? So this is mainly to gain the levels in the case of the yen crosses. Euro yen, if you see, the net change is about 126 positive, and in the case of GBP yen, about 154 pips positive. So by rising these, they are able to gain significantly the levels in the case of the yen cross. Now, this we are able to understand the current market condition. Then what do we expect out of that? That's the most important thing. So let me recollect what has happened on Friday during the non-farm payroll. And before the non-farm payroll, they made a drop after the GBP data. They started making the slide in the case of euro and GBP, and subsequently they came closer to that of the low and then broke the low and came below significantly because the unemployment rate was more than unexpected, more than 10-point level. So obviously they made a significant drop, and when all the traders thought that okay, then it is a risk aversion move, so obviously when they jumped into the market and taken the sell position, the players, they took advantage of that and they bought all the sells, because obviously they are market facilitators, so they have to see that the trades happen. Then after the drop, they quickly bought everything and made a quick rise, and that was a big surprise. And then the explanation given was the USD weakening move. So because the US data is bad, so USD weakening move is happening. And earlier they said it is US risk aversion move. Subsequently they said USD weakening move. So this is how they give different interpretations, but ultimately what is more important is whom they are going to trap and earn from them, and to whom they are going to test the patience. Now, obviously, at the highest level, nobody will be willing to make a buy. When there is a drop, probably anybody will think to buy, and when they buy around those drop levels, and subsequently they drop and hit their stops, further drop and hit their stops, and subsequently rise. So whether you do a buy and sell trade or whether you do a sell and buy trade, the element of risk is always there. So in the market, if you become bullish or bearish, it doesn't mean that you will be able to do a very safe trade. So obviously one need to understand the element of risk is there in all type of trades, in whether you do a sell and buy trade or you do a buy and sell trade. Ultimately what is more important is the trading strategy. So the trading strategy is basically it should be developed in such a way so that it can limit the risk and maximize the reward. So obviously you cannot take unlimited risk without keeping a stop, or you can not just use hedging order just like that and continuously handle the hedge without understanding how to handle the hedge. Then invariably you find that the mind becomes fatigued and you tend to make distressed trades. So ultimately we need to understand that how the players make the moves in the market, and in tandem with that of their moves, we should be able to take positions and close positions effectively with profit. And we should also have the mindset to accept a small loss. The first and basic rule is after taking a position, if the position is making loss for 2 hours continuously, then you try to close the position or hedge it. Just the first most important strategy one need to understand. That means you are sold and somebody has bought, and the person who has bought is seeing profit, and if he books profit, obviously he is not going to buy it at a lower level. So we need to understand somebody has bought and the market is raised after our selling. Then the position is continuously making loss for 2 hours. That means we are going to see that loss is going to mount. Instead, you hedge the position. If you don't have the hedging facility, close the position. Then review the market and take another position. So accepting a small loss is also very important in trading strategy. The second important thing is you can use stop. And if you are using a stop, see that the stop is placed to limit the risk and doesn't really mean that you have to keep the stop far away so that you can talk about the risk reward ratio. Suppose I am taking a risk of 100 pips. So here I take a buy position at 1.4937 or 35 and keep 100 pips below a stop 1.4835 and subsequently aim for 300 pips rise. Okay, fine. As per the statistical calculation, it is fine. So we are in the risk ratio of 1:3. So 100 pips we may lose, and if we don't lose, then we might gain about 300 pips profit. Fine. But unfortunately, if the market drops and hit our stop and subsequently make a rise, then we are not there in the market to book profit. At that stage, while keeping 100 pips stop, you need to recognize or you need to reflect on yourself. Will I be able to accept 100 pips loss? So the optimum level of keeping a stop is about 30 to 45 pips. And so that if you lose some money, you will be able to gain back. If you lose about 100 pips and 200 pips, then it is very difficult to gain in one single trade. So that you need to understand. So it is very easy to lose money in the market when you do emotional trades. But ultimately what is more important for us is whether we do a buy and sell trade or do a sell and buy trade, we should be able to end up with a net profit. So with that in mind, we need to read the intentions of the players, what they are trying to do. And we use the forecast, we use the market reading and also we use the trading strategy. So all together when we try to use, we'll end up in making net profit. It is not the gross profit in all positions. We will end up in making net profit. Ultimately, we all enter into the market to gain money from that other market and not simply lose money and become addicted to trading. So when many people, when they tend to hold the positions for a longer time, and invariably you find that they become mentally fatigued, they do not know what to do, and invariably look for forecasts and whether it will drop or rise and things like that. But when the traders continue to take the sell positions and they are not willing to buy in a swing trade, obviously the players are going to hold the higher levels for a long time and test the patience of the traders. And slowly they may rise and induce more fear to that of the traders. And if we don't use the trading strategy of using hedging or exiting out of the positions when it is unfavorable for a long time, then you might find that the loss might accumulate. Once the loss becomes big, then we will be really worried how to close the positions. So there again, you need to have the trading strategy to limit the risk and come out still with that of the net profit. For that, the trading strategy you need to understand, because the players also use the trading strategy. You might be knowing that on Friday they dropped towards close euro, but subsequently they gained the levels. So obviously to drop, they would have sold euro, only then it can come down. And they dropped euro and raised GBP, mainly to drop euro GBP on Friday. So this is how they have got very specific directions, or they have got very specific ideas where exactly they can hit the stops, where exactly they can make money. Accordingly, they can make the moves. So when they drop euro, many traders might buy and they are not worried about it. And after the rise, those traders who have taken the buy position might book profit and they are not worried about it. Why? Because they are able to make elsewhere much bigger money when compared to that of the major. Hence, you find that they always make predetermined, or they make specific moves in the market. And when they are rising and holding euro like this for about 2-3 hours, they know that a lot of traders will sell. Then they are absorbing all the sells. And when they are absorbing all the sells, they are not fools to just like that exit. They will make one upward stop and hit the stops and then drop. So this is how they use their trading strategy. We need to understand their trading strategy and trade accordingly. Without knowing the strength and weaknesses of the opponent, it is very difficult to win in a game. So we are all small people trading against the giants. And when we are trying to trade against the giant, it might appear it is better to trade along with that of the giants. When they are rising, why not you take a buy position? And what you come across there might appear true briefly for about 10-20 pips or 50 pips. And suddenly when they drop, we will not be in a position to withstand. For that, you need a trading strategy to keep stop at entry once a position makes profit. So these are all the basic trading strategy one need to follow in order to be successful in trading and making consistent money from that other market. Now, I explained to you that they are initially making a contrarian and USD CHF. Again, they made a drop. The net change is 50 pips negative, whereas in the case of euro, the net change positive is 90 pips. You can understand that USD CHF, they don't want to drop more. On Friday, they made the drop in euro CHF below that of 1.51 area, and subsequently they are making a rise to that level of 1.5119, 1.5122 level. 1.5121 is the high and net change is positive. So they make the moves only in these 6 pairs and bring in all the volatility in the rest of the crosses. So that is the skill set of the players, and we need to really appreciate and understand how they are doing it. Let them do it and finish all their moves, and subsequently when they want to drop, you try to take a sell position, you will be able to really book profit, because obviously by holding the levels alone they are not booking profit. and they have to induce the traders to commit positions, and subsequently they have to move the market against the expectations of the market. Only then they make money. If they move the market in tandem with that of the expectations of the traders will be making money and not the big players. So that you have to keep in mind. Then in the case of the commodity pairs, USD CAD, the net change is 54 pips negative, and in the case of AUD, the net change is 76 pips positive, and they made big moves during the Japanese session itself in a thin volume condition. So when there is a thin volume condition, when they raised the levels, you can understand that they got a different intention altogether. So let us see the forecast first, then later on take up from the live market code page. So let me display the camera over that of the PowerPoint presentation. So here you come across the expected market moves for the day, Japanese session, volatile moves, and slide. So obviously the Japanese session is from that of 0030 GMT up to the 7:30 GMT. So from 6:30 GMT, they are expected to slide. Before that, they may make one more upward stop. I'll refer to that of the initial high and low, then you will be able to understand how exactly they are making the moves. Then swing and slide during the early European session. They are expected to slide quickly during the European session. They may come closer to that of the low, or they may cut the low and then again swing till close of the European session. Then again during the US session, they will make a nominal rise and then slide during the US session. These are all the expected moves for today, and it is weak beginning false move in the case of Euro and GBP seen. So the first week we have seen that the market was showing up and down volatile moves, and you know that very well. From the second to that of the third week, they make the trending move, and in that particular trending move, they will be making weak beginning false move. During that of the month beginning and the month end, they will make the trend reversal moves, and those moves will be very quick, and they will not be holding like this, and they will make up and down move. But when you try to see the chart in continuation of that of the previous week move, obviously you will find that Euro has broken the resistance and it is staying above that of the resistance, etc. But ultimately what the players try to do is they keep that as a reference level, and they got their limitations. They can rise or drop about 150 pips in the case of Euro, 250 pips in the case of GBP. Within the limits, they try to make the moves in the market, create the market sentiment, and act against that of the traders. So now you find that USD weakening sentiment is being created rather than risk appetite. So if you think that the risk appetite is going to continue because the US economic conditions, the weak data represent that US risk aversion is supposed to happen, whereas they are showing the USD weakening move. So it is not risk aversion or risk appetite, it is USD weakening move. So alternatively, they try to make such moves, give some attributes to that, and try to convince the traders this is how the market is going to move, and suddenly reverse the market and create anti-sentiment. Now, with regard to the initial highs and the lows for the day, now in the case of Euro, 1.4849 is the low, which is intact, and the high is 1.4938, and they cut the high and they formed a new high, 1.4942. So you can understand that they cut the high only by about 6 pips. The net change is currently about 87 pips positive. So they may make one more cut during the late Japanese session above that of the high, right, 1.4945 or 1.4947, and subsequently make the drop. This is how, when the new high has been formed and the new high has not been cut during the late session for 30 minutes, you can try to take a sell position there. And from the start of the session, they have been cutting the high. So obviously, you should not try to take a sell position in a hurry. Instead, you have to wait for them to stop cutting the high during the late session. Because I told you that during the early and the late sessions, they will be handling the cross. They will be handling the majors. During mid session, they will handle the crosses. So if you want to trade in majors, then wait for them to stop cutting the high in the last 1 hour of the session or last 1 hour and 30 minutes of the session. Then you try to take a sell position. You'll be able to quickly see profit and keep stop at entry. Then during the drop, you can either capture a profit of 30 pips, 45 pips or 75 pips if the going is good. Then in the case of GBP, 1.6610 is the low which is intact. The high is 1.6718. That was the initial high, and subsequently they cut the high and formed a new high, 1.6734. So there is a nominal cut above that of the high, and they just raised about 15-20 pips, and they are holding above that of the initial high. And in the case of euro also, they are holding below that of the initial high in the case of euro, and in the case of GBP, they are holding above that of the initial high. This you can understand that the GBP net change is about 123 pips positive. So they wanted to rise GBP more when compared to that of euro. Thereby, euro GBP can drop further down. So because they have built huge sell positions by holding the higher levels in the case of euro GBP, and against that they wanted to buy. When the traders turn sellers, then they will try to buy. And when the traders started buying, then they will drop. So this sort of moves, they will try to do it. So they will always create the sentiment that act against the traders. Quickly keep in mind. So don't think that they will keep the sentiment forever. And in the case of USD CHF, 1.0122 is the low and 1.0121 is the current low. And then they are holding above that of 1.0122, similar to that of euro. And they may not make much of a downward stopping in the case of USD CHF, and also an upward stopping in the case of euro. And probably they might make one more rise in the case of GBP, just to drop euro GBP and subsequently drop GBP as well. So they are done about 126 net change positive. Another 25 pips or 24 pips they could make and then make that drop. So keep that in mind. That is how you have to relate the net change with that of the high and with net change with that of the current level, and try to take positions when the new high has been formed, when they have made about 150 pips net change in a hurry during the Japanese session itself. And if at all they want to rise, they can rise another 100 pips only above that. And so by gaining the levels, they don't gain anything. Only when the traders commit and when they are able to hit the stops and when they are able to earn money from that of the traders, they are benefited. So for that, they quickly either use the gap time or during the less traded sessions and try to gain the levels and afterwards offload the positions. So they have already done the offloading on Friday. They made up and down moves in the case of euro and GBP using various attributes, and people will be wondering why such a sudden volatile move happened after the data release. And when the data was very, very distinct, that the employment rate was dismally poor, and still they made the rise in the case of euro and GBP. Later on they said that, okay, USD has to weaken because the US data is weak. So that is how they give an interpretation on that. And in the case of yen, they made a drop on Friday and subsequently they made a rise again. They are holding above that of the psychological level 9.20, and they may just, for the week beginning, they may cut the low again when they are dropping euro and GBP as a continuation of the contrarian move. As you see that they are rising, they raised euro, they raised GBP, and also they raised USD yen. So when they reverse it, when they drop euro and they drop GBP, and they will also drop USD yen to make a downward stop and subsequently make the rise in the case of USD yen. So around 89.50 is a good buy level, or when they come closer to the top 89.50, you watch, and when they stop cutting the low for more than 30 minutes to 2 hours, you can try to take a buy position in the case of USD yen, and keep stop at entry once the position makes profit if you want to maximize the profit. And in the case of Australian dollar, they made a very quick upward rise when compared to that of Friday. They made a drop in the case of Australian dollar and quickly gained the levels towards close of the US session, and they have gone still higher to that of 0.9270, and the high currently is 9271. They cut the high only by 1 pip, and they are holding it in tandem with that of Euro and GBP. The net change in the case of Australian dollar is currently 67 pips positive, and they can just cut the high by a few pips, about 4-5 pips, and subsequently make that drop. So at that time, you can take a sell position. And in the case of Canadian dollar, 1.0679 is the low, 1.0773 is the high, and currently you come across that the low has not been broken, even though USD weakening moves is seen in the case of other currency pairs, and currently it is around 1.0687, and the high is 1.0773. That's quite far off, and the net change in the case of Canadian dollar is 47 pips, when it is 68 pips positive in the case of Australian dollar. It is only 47 pips net change negative in the case of Canadian dollar. So they don't want to drop Canadian dollar big. So when they are closer to that of the low and not cut the low, then you can understand they make a small brief stop and brief false move closer to that of the low and subsequently rise without cutting the low. Then at that time you can take a buy position, and once the position makes profit of 20-30 pips, keep stop at entry and try to close the position when they go above that of the high, and stop cutting the new high for more than 30 minutes. So this is how you should be able to aim for the swing trade. And if you are doing position trade, the trading strategies are totally different, and you can trail the stop maintaining about 75 pips away from that of the market. And so when they make a 75 pips drop in the case of, say, USD CAD, then you accept that minimal profit, and then again try to re-enter. This is how you should try to do, rather than simply holding a loss-making position and praying to God that the position should make profit. Because definitely you will see that drop will happen, but whether we will be able to withstand or holding the position for such a long time, or whether our margin will be able to hold the position for such a long time. These are all the constraints one will face, and you need to plan beforehand rather than after taking the plan try to do crisis management. So let me minimize the PowerPoint presentation and keep the camera over that of the live market code page and take up the questions here which are asked. Smith has got a question. Euro and GBP rise is a false move or not? Yes, it is a false move for the week beginning. What is your view on USDN? USDN is expected to make a drop below that of 90 area, and in tandem with that of drop in the case of Euro and GBP, and subsequently rise. So I have given the level 89.50. Around that we can watch and try to buy. Then I think Euro is currently a sell. Okay, but not exactly the current level. Towards the close of the session, around 6:37 GMT, you watch where exactly they are. They stop cutting the low, stop cutting the high, then you can try to take a sell position. Then you will see quick profit. Ultimately, whether you sell it at 1.4931 or 1.4942, but the position makes profit, we are happy about it. So that is how. Don't give too much importance to that of the level, and ultimately our trade should end up with profit making. Keep that as an objective. Okay. Knew it. Could you please explain once again what causes the head and shoulder pattern with respect to the player's action? Okay. The players make circular trades in the market, gaining the levels. So obviously one set of players will keep the buy orders at the higher level, another set of, or from the another deal room, the same group of players from another deal room, they will place the sell orders, and those sell orders will be absorbed and higher level buy orders will be kept. Thereby, you find that they make the circular trade among themselves and try to gain the levels. By that, they don't lose any money. And in the event if there are some sporadic trades or the orders, limit orders are available, they might get filled. And they are not worried about it because that will be thin volume when compared to that of their massive profit making objective. So that is nothing for them, and they try to gain the levels. In that process, at the highest level, in the group, somebody has to buy. And when they take the highest level buy, say for example 1.4942, they have to keep a buy order and then they have to sell. And afterwards they keep again 1.4942 and remove the order and keep 1.4940. Up to 2 pips they will fill it. And again keep 1.4942 buy order and keep another sell order 1.4935, lower than that of the buy order. When the buy order is removed, automatically the order will trigger the buy or the stops which are placed up to that level of 1.4931. This is how they try to fill the orders. And after filling the orders, obviously some group among the players will be holding highest level buy. And those highest level buys, they need to exit. So what they do is they finish this and they don't mind holding the highest level buy orders because there might be only sporadic selling happen to those highest level buys, and those they have to liquidate. For that, what they do is after making a drop and earning some money, hitting the stops on the downside, they make again a rise. At that time, the first group which was selling, they will try to place the highest level buy orders, but these buy orders will be with a condition, all or none, is referred as. So that they will not be able to buy all the orders which are coming for selling in the market, and only specific orders it can absorb, but no such specific sell orders will be placed in the market. As a result, you will find they will only use that to keep the order and remove it, keep the order and remove it. In the live market code page, you can sometimes see the higher level buy orders or a bid will be seen, and that will not get filled, and you will not see the new high has been formed. But they keep it like that and remove it and sell it to that of the higher level buy orders of the traders. So in that formation, you find the double head formation, head and shoulder formation, etc. So they are all nothing but the strategies of the players. Do the uptrend for Euro and GBP still seems solid? Can we expect a profit-taking dip or a bigger drop from current levels? See, I am expecting the drop because they have been doing a high level consolidation with a nominal upward rise, and they are doing sporadic upward stop and holding high. So obviously they want to earn for the month of November and December, because December there will be thin volume, many people will go on Christmas holidays. So obviously before that, for 2 months they have to earn. For that purpose, they will be making really volatile moves this month. And obviously they will just gain levels in the month of December. You will be noticing it during December. And if you happen to refer to the charts of every year December, you will find the exact opposite move of what the prevailing trend in the month of October and November. The overall USD gaining move perhaps finished. Okay, we have to wait and see whether it is finished or not. And again, Euro and GBP rise will be the next until end of the year, or do you expect any change? So I am expecting them to make a very quick downwards drop, and see, they have to trap the traders. When all traders turn long, then obviously everybody is waiting for Euro to go to 1.50 or 1.52 and try to book profit, and they have kept a stop at the entry also as a trading strategy. Then how the players are going to make money? See, this is not, the player's objective is not to gain the levels. The player's objective is to earn money for their money invested in the market. So obviously they have to, once they continue to trap the short sellers, the traders become afraid and they don't do any more short selling. And they will also try to buy after a drop. Then you will find the traders the players show their true color. Still traders are doing sell and buy trade because they are not become fatigued as such. So that is why you come across this sort of gaining of the levels is happening. And moreover, the market volume is greatly reduced. That is why the holding pattern is also for a prolonged time is seen. Otherwise, normally the trend reversal happens in about 7 days to 13 days. But nowadays it is taking a longer time to a greater extent of 37 days to 49 days. And these things are mainly because of thin volume conditions in the market. By holding levels, that players don't gain anything. Keep it in mind. They expect US GBPN at around 1.46 level again. So GBPN, the low is 149.27, the high is 150.87. Currently the market is closer to that of the high. They may go closer to that of the low, probably make a downward stop and below that and rise. So they may not be able to go to the level of 146 as we anticipate. Then, what do you say about stop loss and risk management? Is correct, but most of my gains came out of temporary losses. If I had to cut all of them with a stop loss without waiting, I probably would have risk over trading. Obviously, that is why I say that instead of stop loss, you try to use hedging, because the stop loss closes your holding position. If you don't have any position, you don't have any scope of earning money from that of the market. You need to have the position, only then it can make either loss or profit. So stop is invariably closing your position. So that might be an adverse attitude towards that of the trade. Instead, you know very well that the market has to make swings, up and down moves. It cannot continuously rise forever or continuously drop forever. So with this approach, if you try to trade, then you can use the hedging. And in case the hedging facility is not available, if you have adequate equity and take only exposure of only 1% of your equity. Suppose you have got about $10,000. If you try to take one mini lot of buy or sell, and if you wait for 2-3 days, definitely you will be able to see a profit booking opportunity in that. So when you wanted to avoid keeping stop, then try to take very less positions, then your trading strategy will work. If you try to take as much as positions as the equity permits, and when the market moves again, then you try to make distress trades of cutting one by one the positions and try to hold the equity or pump in money and things like that, you become distressed. Yeah, I kept the camera over that of the live market quote page. I think it might be visible. Okay, trade what you know. Don't believe everything you hear or read. Yeah, that's true. You have to get convinced and trade. That's the most important thing. Just because Sivaraman is telling like that, if you try to trade without understanding the whole concept of it, then it may not work for you. So that is why every time I try to talk about the forecast, I try to talk about the trading strategy and also the market reading. So all the three are important for us to make successful trade. Okay. Are you seeing that weak beginning false moon? Yes, I explained it. Is it only converted? Okay, at start of the Asian session, they are making big up moves in euro. I think a gap up. These are a false move. Yes. Why they don't do this the last Friday? Yeah, obviously they see in a thin volume condition, gaining level without buying is the achievement, right? Yeah, I'll show the market focus slide. Okay, what time the initial highs and lows are being formed? Around 2:30 to 3:30 GMT, the initial highs and lows are being set. Okay, Santosh. The view in the end of October that there could be a massive drop in euro and GBP. View was that it can go to 1.57 again. It's no longer valid, and now we are in an uptrend. Please correct me if I am wrong. So just because we have seen 1.67 in the case of GBP, you find that it is not possible. You know that earlier in the month of July, August, they took it up to 1.70 and Subsequently, that low at the time was 1.60, and they dropped and came down to that level of 1.57. So nothing you can say that it is impossible in the market. It is all in the hands of the players. What do you see for the yen crosses? The yen crosses are expected to make some drop below that of the low and subsequently rise in this week. Okay. Which day will they commence trend reversals for the month? See, normally the trend reversals are set during the last week of the month and the first week of the month. So, nearly about 9 to 10 days they will try to do it. Sometimes it gets extended up to 13 days or 17 days. You will find these things are happening in prime numbers. Okay. Do you stand by your initial forecast of USD gaining moves first 2 weeks of now? Yeah, I stand with that of the forecast expectations, because I have seen that the forecast might get delayed, but it has not failed. When we will see USDN around 95. So before end of this year, I am expecting yen to make a substantial rise. Let us hope it happens soon. Does US session starts by 14:30? Yes. Okay. I think time is up. There are so many other questions. What is your prediction for gold? Gold, they made, see, when Euro and GBP are making a higher level swings and upward stop, and gold, they just showed the psychological level 1100, and in the futures they showed about 1102 and subsequently made the drop, and today again they made the highest 1100, and they are expected to drop. They have been holding it and making a brief upward stop, and the upward stop and strength is reduced. It indicates that they wanted to just create the bullish feel and inducing the traders to buy, rather than short sellers are still prevailing in the market in a large number. Okay, still you are right about hedging, but it is very hard for me. See, if you try to practice it in a demo trading platform, in a right trading, probably you might find it stressful. In a demo trading platform, try to use it. It's like driving. Suppose you are using a left-hand drive in one country and you are supposed to do a right-hand drive in another country. Then obviously, you will find certain amount of variation with regard to the orientations. And gradually, if you get accustomed to that, then you will find it is a child's play. Because you know the basic driving, but when there is a change, obviously your body finds it difficult to accept it to start with. The mind has to accept it. Then later on you will find that hedging trading is really useful, and you will be able to really hold your positions without eroding your usable margin visibly. In this case, for Euro example, now make big moves and London traders not come in yet. So Asian players are sole behind this rise in the US. It's not Asian traders or London traders. It is basically the players are holding it. So the players are distributed all over the world, and their counterparts are doing this sort of moves. And the traders are obviously helpless. The traders get stunned when they see new levels and new lows or new highs. Do you expect the rise in the case during US session? I am expecting a drop during US session today. Okay, there are so many questions. Okay, let me display the PowerPoint presentation again. The forecast for the day. Okay, Japanese session, volatile moves and slide, then swing and slide during early European session. So you find that they have calmed down in the case of Euro and GBP. They just made a small dip. That means what? They gain the levels, and whoever is willing to buy here, they are willing to sell to them. But they are not giving profit booking opportunity either for that of the short sellers or for that of the buyers. Then you have to understand how exactly they are going to give the profit booking opportunity for one set of traders and loss booking opportunity to another set of traders. There comes your skill set of reading the market. Then swing and slide during the early European session and swing moves till close of the European session. That means they will make the swing between high and low or near that of the low and subsequently swing and slide during the US session. So a swing is always opposite to that of the next move. Suppose if there is a swing and rise, that means they will make up and down move. We won't be knowing whether they want to rise or drop, but subsequently you will find that they will rise. Okay, then it is swing and rise. So a swing means always either near to that of the low or near that of the high if there are some orders pending, and if there is no order from that of the trading, they swing near that of the middle level. So when they hold near low and make only about 5-10 pips up and down move, understand that no trader is there in the market. They are only keeping the market alive by making swings. So during such time, don't try to take positions because they will make up and down move. When they come closer to the high, try to see how they are handling the high and take a sell position, irrespective of the market sentiment. And when they are coming closer to the low and how they are handling the low, you watch for 30 minutes, and if they are not cutting the low in that 30 minutes of observation, you try to take a buy, then you will be able to book profit. Still, you cannot take unlimited risk. Keep hedging order of either 30 or 45 pips to limit the risk. And once the position makes profit, either sell or buy, try to keep stop at N3 so that you don't incur any loss in your trading to start with. Then you think of maximizing the profit. So it is a weak beginning false move you've seen, and in the rest of the week I am expecting USD to gain as a surprise move, and they may call it as a USD gaining move or a risk aversion move. It is immaterial, but till second week of till end of this week, I am expecting USD gaining moves with regard to the currencies, and in the case of stock market, I am expecting a rise during this particular week, and currencies are expected to drop. It might be very surprising because many people think that when Dow Jones rises, Euro rises, and you will find that correlation gradually dissociates. And during the third week of this month, I am expecting the commodity pairs to make a big downward drop and subsequently reverse. And from fourth week onwards, you will find USD weakening move till first week of December. Then afterwards, you will find the market will be making up and down move in a thin volume condition. Until April of next year, you will come across USD weakening moves, and afterwards USD will be gaining considerably. So keep this forecast in mind as a larger time frame forecast, and ultimately we are more interested with regard to that of the intraday swing trades. So whenever you are taking a position, the position should be able to make profit, and that should be the objective. Do more of a swing trade and build up your equity, then subsequently think of your position trade. So I take this opportunity to thank FX Trade for the nice opportunity given for me to interact with you people. Then I will come again by tomorrow and give the forecast, and also meanwhile I'll display the forecast in the Forex Market Reading blog, and there you can ask your further questions. I am willing to answer those questions. Thank you all. See you again by tomorrow.